This is like countdown for New Year's Eve. We're like a few seconds away.
I know.
How about that, huh? The mug. All right. Cherif Medawar here. I want to welcome you all to our call on Zoom for Q&A and kind of giving you updates on what's happening, what to predict in 2021. First of all, Merry Christmas. If in case I had not sent you a Merry Christmas, you haven't received our email for the Merry Christmas and the holiday cheerings and best wishes. And Happy New Year, 2021. The good news is we actually love the new technology that I could see more people with less effort while I'm sitting somewhere, either in California, in Cancun, Puerto Rico, or Florida. Those are the four places I go to quite often. Although I am right now in Cancun. As you know, I own part of a hotel here and spend some time here and spend a lot of time in Puerto Rico and lots of time in the Bay Area where we have a lot of investments for the real estate funds that we have. And the education is now going to be mostly on calls like this. And I'll tell you more about it as we continue. So I'm excited to see more and more people joining us. I'm also live on Facebook for this call. Going forward, we'll be doing these as private calls for people who will become members of that and will join these kind of masterminds, if you will, but I'll tell you more about it later. For now, Ashley, you want to kind of frame, or maybe let me frame it. Let me tell you what I'm going to do. I'm going to give you, I wrote a lot of bullet points of things I want to cover with you. For example, I want to talk about what's predicted with residential real estate, what's predicted with commercial real estate. And I want to talk about kind of the state of the economy, the way I see it. A lot of people talk positive things. Some people talk negative things expected in 2021 and beyond, if you will. But I like to go by facts and figures, not some craziness out there. And so I'll talk about these key things as we start. I'll talk about kind of residential and then commercial and where the opportunities are. I will take some questions from you. And then I'll tell you also what we're offering for next year and how you can participate and the format we're going to be doing that in. So Ashley, you want to kind of give kind of any feedback on this?
Yes. First of all, Happy New Year to everybody. We've really been looking forward to this call. So welcome, and please use this as a format to ask your questions. Many of you have emailed in questions to support. So over this next hour or so, Cherif will ask me to read those questions off and he'll be able to answer them. I would also like to remind you that on this Zoom call at the bottom of your screen, there are some little choices that you can chat or ask us a question. Feel free to use the chat and the Q&A if you have any question that comes up, and we will do our very best to make sure that all of those questions get answered. So without further ado, Cherif, I think you can get started.
Thank you. The time is going to be about an hour or so. We'll see. I don't like to kind of squeeze myself into any time box, but we'll play it by ear. And let me start by explaining that a lot of people are cheering like, hey, you know, 2020 is behind us and now we're in 2021. Well, the bad news is COVID is still here. The pandemic is still around. The vaccine is happening. It's going on. I have a lot of family members that are in the medical field. There's quite a few doctors. My sister's a doctor. Her husband, my brother-in-law, is in infectious diseases in Los Angeles. So they're dealing with this stuff and they are actually telling me that they are taking the vaccine. So the good news is, yes, it's pretty good to know that there is a vaccine. I guess you take one dose and then 28 days you take another dose, but it's very positive to have it rolled out already, because once we can handle this pandemic and we can handle this issue, things should start going back to normal. So I think in general, year 2021 will be a year of recovery. And when it comes to real estate, let's go right into real estate and let's go right into it. Entire real estate concept, when you talk about the United States and home sales and price index, etc., it's so broad. It just gives you an idea of where the economy is and the sentiment of a lot of people. So whatever I'm going to say, you need to zero in on your own market, your backyard, what's happening with what you're trying to do, what you're trying to accomplish. So basically, everything that's happening in real estate is based on supply and demand. And if the supply is low, while demand remains the same or even gets low as well, in ratio, the demand may look like it's higher, but it's just higher because there is so little supply. So when you look right now at what's happening, and I took a lot of numbers here that I want to share with you. This is one of the lowest level of inventories we have seen. As a matter of fact, the statistics, the inventory is so low that data going back to 40 years will show you that it has never been as low as it is right now. So there is like a way to measure that. It's called the month's supply of inventory, the MSI measurement, which is the number of properties that are on the market, the sales volumes or activities, if you will, and how long it will take to sell these homes. And then they measure that in how many months it would take. So if we don't list any more homes, how long will it take to get rid of that inventory that's on the market? Usually it's about 6 months, 8 months. When it's really bad, it can be like, more than 8 months, like in 2008, 2009. Right now, you know how many months supply exists on the market? 2.5 months. That's insane. This is such little inventory, it's unbelievable. So what is that doing to us? Well, the demand is still there. And relative to the inventory, the demand is high. So what's that going to do to the prices? The prices are going to remain strong. As a matter of fact, the interest rate being low, supply being low, demand relatively high for people who can afford homes and all this, they're moving forward because 50%, according to National Association of Realtors, 50% of the buyers feel this is the best time they could buy, okay? And according to National Association of Realtors, they predict an 8% increase this year, 2021, and a 5.5% increase in residential home in 2022, residential home prices, not just sales volumes, okay? So we're talking, they're predicting an increase. Now, the Federal Reserve announced, and you can Google what I'm telling you, so I'm telling you the sources. Federal Reserve announced that they will maintain this actual low interest rate, which went from 3.7, by the way, to now the 14th lowest on record, which is now 2.71%. You can get it fixed for 30 years to buy a home. They expect it to remain unchanged till 2023. So this is insane. So if you're an owner, an existing owner, or you're a seller, this is very good news. If you're a buyer, well, it's not such good news for you. So in residential, some people, I call them merchant of chaos. They like to give you bad news. And this is what they do. They get a lot of hits on YouTube or on social media by actually selling negativity. I like to go by facts and figures. And if something is negative, how do I position myself? How do I position my investors, my students, et cetera, to work it and transform the challenges into our opportunities? So the merchants of chaos, those who want to create problems, they tell you, hey, listen, mortgage forbearance is ticking upward. I saw this in the news. Wave of evictions feared in first quarter 2021. Some economists even were saying that the foreclosures in 2021 will be unprecedented. All this is BS, and I'll tell you why. The actual mortgage demand increased by 28% just in December 2020. And that's from CNBC. You can put CNBC mortgage demand increase and let them show you the statistics and all this good stuff, okay? And as I told you before, 50% of buyers feel it's a very good time right now. Also, because supply is what's available, the inventory in the market is so low and the demand is still strong, you would think that everybody's gonna want to actually go out there and build like a new apartment building or a new home, etc., so it can take some absorption, take some of what's the demand that's out there. But you can't, because there are a lot of stricter codes, a lot harder to get permits to build. And also, you can Google this statistic. The lumber cost increased by 80% in 2020. So it's a lot more expensive to build a new facility. It takes a lot longer to get approval to build it. And that is going to be very positive news for us. And so what is the problem? Who is asking for forbearance? Forbearance is they're saying, I can't make payments for the next 6 months, and the bank is not going to foreclose. They're going to work with them, and then they're going to tag these payments to the end of the loan. So what's happening is, who is hurt? Who's hurt? Those who have low credit scores. They have low incomes, and they're going to get hit the hardest. So if you own an apartment building, for example, and you're in a C-class apartment building, lower income, lower rents, etc., like $500 for a 1-bedroom, or $650 for a 2-bedroom, stuff like this. Those people are experiencing very high default rates. So I looked at the statistics in general. 8 million single-family mortgages are backed by FHA. FHA is Federal Housing Association Administration. 10%, they said they have 10% delinquency due to the pandemic. But statistically, they have about 5% delinquency. Delinquency is people who are over 90 days in payments that are late. And the CARES Act, it has they said there is a freeze on foreclosure. It can't foreclose on these people. So if 10% of 8 million homeowners that have FHA, which is lower income, etc., are in trouble, that's 800,000. But that's really 400,000 more than usual. The impact on it is, when you think about it, and you look how many, like there's a company called Black Knight. They looked at overall for the US economy, 2.75 million mortgages have active forbearance. That's 5.2% of residential properties with a mortgage. 5.2% of residential properties mortgage are asking for forbearance. And this was a statistics on this in December 8, 2020, okay? Now, take a look at the entire economy. I'm gonna tell you something that will really put this in perspective. There is 138 million homes or housing units, if you will, in 2019. That's the number in 2019, not changed much in 2020. 138 million in the United States housing units. When I say housing units, that includes single family homes, condo apartments, and multi-units apartment buildings. Okay, so that's everything that's residential. 138 million. 40% of these are free and clear. Google that. Google it. 40% are free and clear. They have 0 mortgages. So 60% have mortgages. That leaves you with about, let me do the math for you, about 50 million properties have home mortgages. And if 5-point-some% of them, which is let's say rounded up to 6%, so that 3 million households may be in default in 2020 because of the forbearance and all this, according to the statistics. 3 million households. Look at this now. They're predicting, these merchants of chaos, these people that want to sell you negative news so they survive by fear, okay? So they're telling you there will be a lot of foreclosures, waves of foreclosures, unprecedented problems, et cetera, because there will be 3 million people that could go into foreclosure. Well, let's define foreclosure. Foreclosure is when the bank actually takes over the property from somebody. But here's the interesting news. The statistic, when you look closer at the statistic, you find out that only in the entire US economy, only 3% of the homes are underwater. Underwater meaning they owe more than the house is worth. Because the economy has been so good for 9 years that property values have gone up and people had to qualify to get mortgages. It's not like 2006, 7, 8, when people are getting mortgages just because they can fog a mirror, okay? So now you really get it down to if foreclosure will be on the whole 3 million households that have asked for forbearance, well, a very small percentage of 3% only are upside down. That means the rest, even if they get foreclosed on and the bank sells the property, there will be equity, they're going to get paid. So they're going to come out ahead of the game. And actually, they may not even go all the way to foreclosure, because if they're in default and they list the home, it's going to sell fast. There is equity. They can maybe get less equity, but they come out ahead So it's not a foreclosure, then that's a sale. All right. So when you actually calculate the numbers, Data Logic is the company that actually did this. You can Google it. Data Logic found out that it's only 0.17% of the homes are upside down. If they get foreclosed on, that would be 96,000 homes that are in trouble. 96,000 out of 138 million. And you want to tell me that residential is trouble? Residential is not in trouble. Residential is good. So what are the opportunities? How can we make money? The money is going to be in commercial real estate. I love commercial real estate. You can't help but making money with income producing properties. You're either going to take them, reposition them, and sell them. And if you learn how to do creative selling, creative financing on the way in, and creative financing on the way out, you will eat the market that you have. Most people have no clue how to do creative financing with commercial. They just do it with residential, at least with option to buy or whatever. But commercial has so many ways. I actually buy by using creative financing, and I resell and make it so attractive to commercial buyers. And some of the commercial buyers don't even know they're potential buyers. I have to go and explain to them, look, if you put this and you pay that, the income is this, and the renters will pay your debt. And I explain to them how the interest is so low right now, what type of loans they should get. And I get my tenants that are leasing from me commercial spaces to buy the buildings. The big tenants that are triple net and all this, I'm holding them because triple net is the tenant is paying me tax, insurance, and maintenance. They have to pay me through the pandemic. They have strong insurances. They have corporate guarantees. I don't have to renegotiate anything. Even when they ask me, can you give us a break for a month during March 15 and all this? I said, I'm sorry, I can't give you a break. We have a contract. Because you're not dealing with people, you're dealing with contracts and publicly traded companies. Well, but individuals like I have small jewelers, etc., that are renting some of these buildings, I go in and tell them, you know what, instead of paying me $7,000, do you realize if you put this, have a lease with option to buy, do that, do this, or we can do it this way, wrap around mortgage. And I teach that stuff. Any of you who've been to my trainings, you know I teach that stuff. It gets very exciting with commercial. So much to do with commercial real estate. So I know I've been getting a lot of messages here. So let me go through some of them. Let me just scroll up here to see. A lot of Happy New Year. Thank you. A lot of pleasantries. All wonderful. Wonderful. Let's get right into business. Questions. Supply is low because there is no foreclosure and many people defaulting. That is your take on the, what is your take on the prices when they do start to foreclose? Well, I think I just covered that earlier. The good thing is you will be able to rewind this and listen again if you have questions. All right, with the COVID-19 going on and businesses closing because of it, I was wondering how the commercial real estate market would correct, especially with retail. Okay, so retail, I don't want to buy a strip mall or a shopping mall because it becomes more involving with the due diligence and the work is just a lot bigger. I like the single tenant buildings. You've heard me say that many times. We've had a very strong program for quite a few years, which is the joint venture program where you find it empty single tenant, you put it under contract, and then you make it happen. You can Google QSRs, quick service restaurants, growing in 2021. And you see for yourself how many companies are growing right now that are quick service restaurants. As a matter of fact, for the first time ever, when we lock in deals under contract, so we find a single tenant building on a busy street and we put it under contract and we start calling tenants. And those who do the joint venture with us, they get the tenant list, they get the program, they get training directly from me, and they get support, etc. When we call the tenants, we are getting people now calling us back and saying, I want to buy the building. So if the building was listed, I don't know, at let's say $1 million, we put it under contract at 800. And we have a formula for that and all this. And we start calling on tenants, and the big tenants call us back and say, we want to buy it from you. How much is it? We just tell them the actual price that it was listed at, $1 million. We have it under contract at 800. We're in control. And I show you, I do it with the students where we use my real estate fund money and we end up making that 200,000 difference because we're controlling the property. So Google it and you'll see how many quick service restaurants are growing. That's what I like. Now, what if there are shopping malls, Cherif? There are opportunities. I can get this mall. It was worth, I don't know, 5 million. I can get it at 2 million right now. What should I do with it? Well, believe it or not, one of the best things you can do with it is take part of it and convert it to residential use. There's a lot of opportunities with that. We've even talked to a student who was doing a deal on industrial. They took part of a shopping mall and did an industrial conversion. When people have one-on-one questions for me, I charge $500 an hour and we go on a call. Cherif, why do you charge so much? Let me tell you, I did a promo earlier this year and I'm charging a lot less. I was just taking half an hour interval. We're doing it at 200 and whatever. But the reason I do 500 an hour is I don't want more than one call a day. I am busy. I make a lot more money doing my own deals, managing my money, my investors' money, and the fund. And that's just how it goes. We will be doing what you call mastermind calls. So monthly, I'll do a call like this, and it will have no time limit, and I'll take the calls, and everybody will participate in giving answers. You will see the people's faces. We'll be able to click on whoever has an answer. It will be mastermind, not just my mind with my vast experience, but those who will join us, and we'll do it at $100 a call. That will be your time to ask the question, not just watching me or listen. You will ask the question, and I will respond, and other people will respond. So if I have somebody with a background of being a developer, and they have an opinion, you will listen to their opinion. Maybe somebody is in the Dallas market and they want to talk about something in their own backyard, they will explain. So we will talk more about that later on this call, but this is the first time I do this, and I'm excited about it because we can do it virtually like this. And we can be sitting, you're sitting at your home, I'm sitting at my home, and we're able to brainstorm and make things happen. I will limit it to the number of people so we all can benefit. And if we have more people, we'll do just more calls, but it will be once a month and it will be $100. So it's like literally $100 a month. So you don't have to worry about it. It's an hour and a half, 2 hours. You don't have to pay the $500. You still, if you want private call, I'll do the 500 an hour. You will discuss with Ashley and you schedule the time and tell you what's available, we do it. But I want to make it more profitable for you. I want to learn from you and with you, and we continue growing together because the opportunities coming up in commercial real estate will be insane. Interest rates are low. A lot of people are going to want out. A lot of small businesses are hurting, like the gentleman who asked the question. And the correction is there, and you don't have to wait for correction. You can force correction. This whole idea is I take a building. I took, when Payless, what is called Payless Shoe Store went out of business, there was a building that all the retail downstairs was Payless Shoe Store. And I found the owner, called him, and I said, listen, would you like to sell? And he said, no. I said, but Payless Shoe Store is going out of business. They're going out completely. He said, yes, I know. But we may be able to just, when they leave, rent the space and all this. I said, well, how much do you want? And we negotiated. He didn't want to sell. He wanted to lease. So I did the lease for him at $6,500 a month. I wrote the lease with him. And then I said, can I have also an option to buy? Because I will lease for 15 years. How beautiful is that? I locked in the space at $6,500 a month with an option to purchase. When I took the space, I separated the space and rented each side $6,500 to 2 separate jewelers. Actually, I got one jeweler, and he recommended another jeweler to be his neighbor because he didn't want me to bring somebody else's. So I pay $6,500 for rent, and I receive $13,000 a month, and I have an option to buy the building. And the day I exercise the option, I'll make $1 million because the seller is receiving from me only $6,500. I'm receiving double that. So I can show you ways to transform the problems and challenges that people see and take them to your advantage. I mean, you can set goals and meditate and do all what you want all day long. If you don't have a practical way to implement what you want and have a very clear exit, you will not know what to do. I have people buying stocks in the stock market, and then they send me, I would like to get on a conference call with you for 500 an hour to discuss this. Okay, you know, I've done trainings for stocks and options all many years ago. I don't do them anymore, but I can discuss with people individually how they want to train. We made a lot of money with this, but I don't like to train it. I would do individual calls on it. And then people tell me, okay, so Tesla went up. Should I buy it more, or should I sell? Or should I sell cover calls? What should I do? Well, if you didn't have a plan when you started and you don't have clear ideas what you're trying to accomplish, of course you're lost. Same with the building. If you're buying a building, what is your plan? You got a loan, you got some leverage. Are you buying it to flip it? So that's plan A. What's plan B? What if you can't flip it? Can you then hold it for a period of time and have a renter make the payments? Oh, that doesn't work. What if you hold it and you cannot get a renter because you're still developing it? Can you get a joint venture partner that has deep pockets, that's honest, and that's solvent? You know what solvent, meaning he has cash flow? Because you can have a wonderful person, very honest, hard worker, but they don't have the money. They won't pay you. So you have to learn the formulas and learn how to do certain things. Okay, let me continue here, get excited about what I'm sharing. Okay, good day. Question, if I sell my residential investment properties, so I'm assuming those like multi-units, what is a relatively safe commercial real estate purchase investment? What I like most when I say relatively safe, I like multi-units that are smaller, like smaller meaning 50 units and less. I like standalone buildings that are only acquired if and when you line up a tenant, because you really can't go wrong. You put it under contract, you find a nice tenant like a McDonald's, a Burger King, a Subway that say, we're going to commit to this, we're going to give you a corporate guarantee, we're going to sign for 10 to 15 years, and we're coming in. You have peace of mind for a long time. That gives me such freedom. I mean, the end goal of being wealthy is to have freedom. Freedom of time, freedom to do what you like. I like teaching. I like to work with students. So I like that type of commercial. I am not crazy about properties that require a lot of work on an ongoing basis. Like I constantly have to market to get new tenants. I constantly have to manage because there's all this, except hotels. Hotels, for instance, if you get the right hotel in the right area, for example, next to the medical center, next to the airport, etc., these are still doing fine. And if you get hotels that have a suite, or like these boutique hotels, you can also promote them on Airbnb. So the Airbnb that's actually a competition for other hotels is an advantage for you because they're booking with you. We're doing 2 developments of hotels in Old San Juan, Puerto Rico, 30 rooms each. They're literally 1 block from each other. Old San Juan, Puerto Rico, they are offering a 40% tax credit. Just listen to the numbers. 4 million the building, 4 million more to develop it and make it just a beautiful luxury 30-suite hotel. One is $8 million to be done. The government gives back, the tourism division of the government gives back 40%. That's over $3 million. So when I'm done, it costs me 8 and it's worth 10 to 12 minimum. Okay, I don't want to even tell you what it could be worth based on my predictions and the numbers. But let's say I paid 8 and it's worth 10, right? Now I get from the 8, 40% tax credit, so it cost me 5, but it's worth 10. But do you think I put the whole 5 as cash down payment? No, I put 2. How do you like to put 2 million and make 5 million? This is how the numbers work. So everybody could look at the same building and see something that is, oh my God, this is a dilapidated building, or this is the problem area. But you can see something that I can do this with it. Problem area, do they still eat? Can I put Jack in the Box there? Can I do this and that? Dilapidated building, can I force improvement? Can I change it? Can I split it? Can I add a floor? There are so many ways. Actually, I don't know if you know, but many of you have attended and have done with me a few years back what's called the Commercial Real Estate Roundtable. This is called an evergreen training because the principles of it, how to find the right buildings, how to analyze the numbers and the market trend, how to actually negotiate and write the contract, how to do the due diligence and line up the right financing, and then how to strategize to get the right management company to help you and to take the property to its highest and best use. This is one of the most profitable programs we've ever done. By the way, Ashley, can we do this? Those who will enroll into the mastermind training that we'll do, which are these monthly calls, and we'll give them a lot of things. Monthly, before the call, let's say a week before the call, I want to send them one of the actual online trainings of a different type of commercial real estate property. So let's say the first month they get the multi-units, where it shows you all the website you need to find the properties, all the website you need to find tenants, all the website you need to analyze the numbers of a property, all the website you need to analyze the trends of a market, how to negotiate the different creative ways. All this is in that. And then the next month, it's going to be the storage facilities. Can we do that, Ashley?
Yeah, we can add that into the university access that we'll be giving them all today. And I'll make sure that happens right away. I think land development, I've been getting a lot of questions about land development. So we might want to start with retail and then do land development. That would be awesome.
great. We have a great in the commercial real estate roundtable for the land development. So this is for those who will enroll, to be clear, into the mastermind calls that are $100 a month, which is $1,200 a year. And you can get on the calls, you can ask me questions, etc. So let's look at some more questions. How is the residential fix and flip market in Puerto Rico? Oh, somebody's interested in Puerto Rico fix and flip. Are there a lot of hard money lenders in Puerto Rico? Yes, there are potential. Look, there is opportunities to make money everywhere in the country, but look for demand. Okay, where is bigger demand? For example, Los Angeles has bigger demand than small town out in the boonies, somewhere in the Midwest, all right, in the winter. But does this mean this one is better? Well, here you may pay $300,000 to fix it for 100 and then sell it and make 100,000 profit. The one in the Midwest in a small town, you may pay just 40,000, fix it for 20, and then flip it and make 40. It all depends on the market and what you're looking for. So yes, there are opportunities in Puerto Rico. There are hard money lenders. The hard money lenders in Puerto Rico are real hard money lenders. I mean, like we're talking 14% interest. So you can maybe build rapport with some of them and start by first trying to partner with somebody. That's always my suggestion. If you're gonna do the first flip and something, partner with somebody. Tell a contractor, listen, instead of just coming with me to work for me, why don't you partner with me? One time I did a deal like this. I didn't want to do the property in Menlo Park, California. I had the property under contract. I was buying it. And I said, geez, I'm so busy with so many other things, but such a profitable property. So I was looking for a contractor. Contractor came and I said, listen, you're going to do this. Why don't you partner with me? And he said, great. How can we work it? I said, you do all the work. You do it like this. If you finish within so many months and we sell it over X, we share 50-50. He said, okay, my expenses will be this. Okay, makes sense. He kind of negotiated a little. And I said, fine. He did everything, finished in less than 6 months. We flipped the property. It was very profitable. He was happy. I was happy. I did a lot less work and a lot less supervision. And your cost, if you partner with somebody like this, your cost will be less. Why? Because you don't have to worry about the 12, 14, 15% interest plus points and whatever. But yes, opportunities everywhere. Puerto Rico is great because the weather is nice, so you can constantly do stuff. Plus that it has such an inflow of people coming in because of the tax incentives they have, especially with Joe Biden taking office and they're changing a lot of tax rules. That could work to your advantage a great deal. So there is a trend of influx of in-migration into Puerto Rico because of the tax things. By the way, I'm neither positive nor negative on Joe Biden coming in or Trump leaving. I mean, I wish them all the best. I hope they know what they're doing. And all we need to understand is what their policies are going to be and how it's going to affect us. If they remove the 1031 exchange, which is when you sell a property, you roll your profit forward into another one, instead of doing that, they're saying, we're going to have you sell it. You can do a 1031 exchange, and then you pay capital gains taxes. And they're moving capital gains from 20 to 40%. What's that going to do? It's going to create less activities in the market. Does this work to your disadvantage? No, it's going to be great for you. You can actually work it to your advantage. Why? You can now start doing creative financing. You can tell people that have the properties, here is 3 ways I can do the deal with you where you can defer your taxes. Actually, for me as a real estate fund manager, I have so many ways to work with sellers who don't want to pay taxes legally to show them ways to defer the taxes. And that's why I'll teach a lot of these things to give you the latest and the greatest of what's happening in 2021. Let us see what the policies are, and I'll tell you how to make money. That's how we did it. I made the most money in 91, made the most money in 2001, made the most money every time they actually change policies and direction. We just understand it, see how it works, and apply it creatively within the compliance rules of IRS and whatever other regulators we're dealing with. Okay, aren't the banks required to tack the forbearance mortgage payments to the back? Yes, they are, to the back of the loan. Extending the loan for that many months, yes, they are. They're required. Banks are not going to just write off the thing and say, hey, listen, you're a nice person. We like you a lot. You're such a nice lady, and you have good kids and all this. So we're going to just go ahead and waive 6 months of payments. No, we're going to maybe waive them for this period, but you're going to pay them at the end. 60% of 138 million is 82 million, not 50 million. Okay, all right. I'm sorry, I did the numbers wrong. Not complaining, just helping. Thank you, Todd. Appreciate it. Sorry for the math. Still From all this, we find out at the end of the day, is actually the number is less than 100,000 homes. Thank you, Todd, for keeping me up to date on accurate numbers. Good one. Some people ask, are you recording this call? He's giving a lot of info. Yes, you will get a link. Ashley will make sure you get a link. By the way, Ashley has been with me since early 2000s. I mean, this stuff is like automatic with her. I don't even have to ask. She knows. She tells me. She updates me. Cherif, what are your thoughts on the hospitality industry? As I told you, find the right properties with the right configurations, and you can make a lot of money in the right locations. I like properties that have larger kind of like suite concept because they can work with Airbnbs. I like properties next to airports because there's always influx of business with less marketing costs. I like properties that are in good condition because there's always, it's easier to manage. I like properties that can be converted. You can convert properties and hotels that to extended stay and compete with the apartment buildings. And you can do it vice versa. And you can actually take properties and do them part Airbnb, part extended stay, and other use. I love hotels. I think hotels are just endless way to make money. I just gave you the example of 2 properties we're doing as properties and hotels in Old San Juan. And when we start the projects, I will do updates on it so people could see the progress of it. It will be fun to watch. Let's see. All right. I would like to ask Cherif why Wyoming LLC for asset protection once he finishes his thoughts on the real estate market. Okay, we'll talk about asset protection later. Okay, you guys can call Nancy, those who want to talk about, hey, can I get into the mastermind? Who do I call? I need to get on this strike. Okay, call Nancy at 844-720-1031, just like 1031 exchange. 844-720-1031 and click extension 408. Extension 408. If the line is busy, just leave a message and we'll call you right back. And leave your phone number clearly and slowly. What are your thoughts about investing in properties to rent for short-term vacation rentals or Airbnb or vacation rental by owner? What areas and type of properties, if you think, do you think it's economy proof? Yes, I like Airbnb. I like small apartment buildings in destination locations. Case in point, I took a property, 12 units upstairs, commercial space downstairs. I like mixed use because I can get the commercial for long term, which I did. I got this company called Anita Gelato, and the Israeli company that have this incredible ice cream, and they're paying great rent. They took the space as is, did an incredible amount of money to rehab it, which tells me they're going to be here for long term, paying a lot of money. Took the upstairs and converted the residential. The owner previous to me had it, and he had jewelry stores, and he was actually giving it to his staff. So he was charging them very little rent. So when I purchased it, I converted to Airbnb little by little as we got people out, converted to Airbnb. The property went from 2.5 million worth to right now easy 5.2 million. And so destination location with the right configuration, meaning 2 bedroom, 3 bedroom, actually a good 1 bedroom size that you can have the pull-out couch and all this could be extremely profitable as an Airbnb. And if Airbnb slows down, you can go extended stay. I like to do extended stay and say, well, we have 30-day right to cancel in case you want to move it back to Airbnb. I like to take these small properties and then convert the apartment building into condos. So we do what's called the horizontal segregation. Take the building and then create individual deeds, and I can sell them separately. So you take a property that 5.2 million is as a property that has 12 units producing Airbnb income, plus the commercial space downstairs. If I just sell the upstairs alone as individual units, I'll make the 5 million. I'll keep the commercial downstairs that pays me 120,000 a year, triple net. That's for life. One deal can change your life. Cherif, I don't have the money. I don't have the down payment. How did you do this? Oh my God, 2.5 million. I'm going to need to put like $500,000 up front. You know what? That's why we teach also how to create your own real estate fund. But you have to understand, it's not just the knowledge that people need. It's the willingness and ability to take action. Because immediately when you have goals, so it's New Year's, and we're January 2nd, 2021 doing this video. So you probably set up some goals yesterday. When you set up the goals, you also have to tell yourself what will be rewarding, what will be great about achieving this goal. And don't forget to do one other thing. What will be so disastrous in my life if I don't pursue that goal? Like Zig Ziglar had this, how to set up goals. You write it. Yes, I did. And he's like got this great speech about goals. Love the guy. But he's missing one very important element. You can watch his presentation about goals and everybody loves it. But then a lot of people say, I tried to set up the goals, don't know why I'm still not making it. You can see the comments on YouTube and whatever from Zig Ziglar, old video, like, I don't know, 20 years ago. Well, because Zig Ziglar missed one little thing. Is the other thing you need to do is not just set up the goal, know what actions you need to take, set up your life to take these actions, find who can help you, and see how rewarding it's going to be when you get it done, all this. He forgot just one little thing, but it's extremely powerful, is you have to create some fear, some disaster, some suffering, some pain, some loss if you don't achieve that goal. Then it becomes a need, it becomes a fear. I got to do this. I cannot not do it. And that just motivates you forward to stay focused on the goal. Focusing, by the way, means not just staying focused on what's important. Actually, focusing means knowing what to eliminate. Focusing means knowing what you eliminate, what not to pay attention to so you can stay the course. All right. So yeah, I like Airbnb. I went off on a tangent on that, and you can make a lot of money with these. Wow, I'm getting a lot of good response on the mastermind. Yes, I love the mastermind. I'm going to learn from you too, guys, based on what you're doing, different markets. That's how I actually was able to create this incredible program with syndications and with doing actually a joint venture. The asset protection came in when we tweaked it a few, like 8-9 years ago when we started, and then we got it to the perfect structure where we have hundreds of students and they're all bragging and happy about what's going on in their life with that structure, peace of mind wise. Okay, yes, we can add. Okay, somebody's asking about this stuff. People that want asset protection. Ashley, can they call Zach directly for asset protection, or should I call Nancy or Zach, or what do you think?
I think for asset protection, let's leave that with Zach, because he'll be able to talk about their tailored issues in depth. And they can reach Zach on his phone at 407-574-6884. And then the training and education programs, including the mastermind that you're going to talk about, they can call Nancy at 844-720-1031, extension 408, and she'll be able to answer all the questions and allow them to get that at the discounted price today.
So Zach, again, is 407-574-6884, and you already have Nancy. Okay, so Zach for the asset protection, Nancy for the mastermind. How can Cherif help with somebody living in Canada? Maybe we can sponsor you with an H-1B visa, move you to the US? Just playing, just joking. Okay. Love Canada, especially the big cities, small cities that don't have much movement, but that doesn't mean you cannot do great work there. Again, like I say, small town in the Midwest, you can do incredible deeds there if you understand your market, focus on the values, understand the type of properties you want to deal with, and see where the opportunities are, where the demand is. Don't try to create demand, see where the demand is and go there and do it, all right? Actually, the way to make money, see where money is going, that's where the demand is, and just stand right in the middle. So in Canada, actually in Canada and most of the Western world, English-speaking world, if you will, plus French and Spanish or whatever, like in Europe, actually, I even in many parts in Africa and China, the same principles apply. The biggest advantage, though, in the US is the way we can get loans, is the way we can work with banks, the way the entrepreneurial mind of a US person works. And the closest to it is Canada, is England, and is Australia. The thing is, I no longer speak in Canada. I used to speak. Last time I spoke, I remember I almost had an accident because it was snowing. And I just don't like the snow. That's why I'm in Cancun, Puerto Rico, and California, and Orlando, Florida, trying to avoid the cold places. But you will find the same principles apply. Would love to get more Canadians in our programs because we can all learn from each other, and you will clean house. I remember last time I was in Toronto, I left a hotel, we had a meeting, and I'm leaving, and I look and I see a big building. On one side of the building, there is McDonald's, Another side, total retail vacant. It's screaming Burger King, Chick-fil-A, Jack in the Box. Like this will be like, I put it under contract, call any one of these companies that will be coming in to take a look. But nobody knew it. Nobody was doing the training and nothing is happening. So you can definitely benefit a great deal. Okay, I've been writing contracts on quick service restaurants and getting outbidded by multiple and strong offers, and get called back by the seller agents stating they get full price or above. Do you recommend just locking the property in at listed price? My market is Seattle, Washington. Well, that's great. So what's happening is you're trying, I'm going to repeat this person. This person is not one of my JV people. But anyway, let's say you're not part of the joint venture program and you want to do it on your own, great. I applaud you for it. All I ask you, if you're using our principles and trainings and all this without all the details, just give us a success story. Say what you've learned from what we have and make it happen. Because a lot of people watch stuff on YouTube for free and then they email and say, I still can't make it happen. Yeah, because you don't have the proof of funds, you don't have the tenant list, you don't have a way to negotiate with, because I negotiate with the tenants. I sometimes have to step in with the brokers, etc. But here's the deal. When you do this, and you realize it's hard to get this property. This property, it's very hard to get it because it's in San Francisco, it's in Seattle, Washington, it's in the Fisher's Market downtown. I want to get this property, but I'm being outbidded. The harder it is to get a property, the easier it is to get the tenant. I'm going to repeat. The harder it is to get the property under contract, the easier it is to get the tenant. So sometimes, yes, I'll pay a little bit more, but then I'll have the tenants. And you know, if you're part of the joint venture, I don't know if this person is, you know the formulas we use. Yes. If the numbers are not there, I don't want to do it. Pardon me? Somebody said something?
It's Royal, and yes, they're JV.
Okay, so I want you to, you know, you have access to me directly with the JV. Email me, what is the challenge? Because this may be a good property to pay slightly more because we can get a higher rental income, especially if it has the actual drive-through. If it has the criteria we talked about. You remember we have 15 criteria for an ideal building. Okay, that's all good. Chris, all right. What are your thoughts regarding buying commercial notes to acquire properties? I bet he meant to, or she meant to acquire properties backdoor to foreclosures. Yes, it would be very good to buy a defaulted note from a bank at a discount. So for example, commercial property worth $1 million. There is a note on it for 700,000 and you can buy the note at a discount at, let's say, 550,000. Just then make sure that that note that you're gonna buy gets verified by a real estate attorney that's local to that market. Because you don't want to buy a discounted mortgage. You know, I've done a lot with discounted mortgages. I used to create notes, etc. You want that attorney to verify that the mortgage was issued correctly. So when you come to foreclosing on these property, on these people, they don't come back and say, oh, you know what, we have an attorney and the way this was signed, the way the bank did this part, it wasn't in compliance with this rule. So now you can't foreclose and now you're stuck. We've heard this more than once. It happened a lot in 2009, 10, 11. Remember, Bank of America paid billions in penalties because of robo-signing and doing some wrong stuff in the spelling out of the mortgages, etc. Now, it's not as common, as prevalent as it used to be. But you actually have to have an attorney review it. I'll be happy if you're part of the mastermind to send it to me for review after you talk to an attorney, because I'm not going to substitute attorneys. They are a key part to the deals. Like people send me, they get me on these calls, say, can you give me a copy of the contract for this? Yeah, I'm happy to work with you, but let me just explain to you that you need to get the attorney to draft the contract. It's the least expensive part of the business and it's the most important one. Okay. So yeah, you can definitely buy the commercial notes at a discount, but understand what you're getting into, analyze the properties. If you're acquiring the property, you're acquiring the asset through a backdoor. You don't want just the cash flow, you want to get the property. And once you get it, that will be a great one to do a case study on. It's one of the things I will be discussing with the mastermind calls, getting these discount notes and how to do them and how to structure them and how to actually modify them. We've done, I don't know if you know, we've done over 1,400 notes. I was the single largest flipper of single family homes in 2009 and 10. That's when we started the real estate fund. But that, I was doing that with my own money on the side. Okay. With the vaccine here, do you have a timeline on hotels? When are they going to be at least 50% occupied? Is an Airbnb next to the hotel? Is Airbnb the next hotel business? No, Airbnb is actually, first let me answer that part, is growing and it's good, provided you're in the right market. It's all based on market. Where? Okay, so it's location, location, location. And then it's the structure. How do you buy this thing? Do you do it easy terms coming in, or are you gonna do all cash? If you're gonna do all cash, you better get the best price, because you're gonna get either price or terms. So you have to understand what you're trying to accomplish with the building, and how much time, and how much effort. So how much money, time, and effort. That's really the three elements you're trying to balance. And once you know this, who's gonna do the effort with me? Who's gonna be doing the work? What if the time doesn't work out, it takes longer? Would I have the staying power? And how much money? What if they don't take that amount? Can I pay more but get it in terms? Can I cut on the expenses? Can I do something more and to increase the value? All these are the variables you're constantly trying to balance. So when is the time for hotels? The idea is to get a hotel now that's running less than 50%, that's in a good market, and they don't know how to manage it. They get tired of it. I mean, you'll be amazed how many people in the hotel business were just riding the market. The market has been very good. And yes, Airbnb gave them a run for their money, but you know what? Airbnb is so good, Marriott Hotels got into Airbnb. Go to Marriott.com and see how many Airbnbs they have. I was going in December to Los Angeles to see my mom and my sister, everybody in my family in Los Angeles. And so we wanted to stay closer to my mom. So I was looking at hotels, and I was looking at Marriott and Hilton, and they have Airbnbs. Nice property. And so it's not gonna die, it's gonna actually grow, it's gonna do fine. And hotels, if you get it at the right price based on the income it produces, all the upside is yours. If you come into the property with a plan of how to increase its income, you have a huge upside with hotels. Hotels are amazing, amazing properties. They're like an underdeveloped apartment building that could be even more profitable than an apartment building with more flexibility and more power for eviction. Can't speak highly enough of hotels. Okay. I mean, just one more thing on hotels. Like the properties in Old San Juan, Puerto Rico, and we're done with them. This is going to take a couple of years project because it's a historic area. It takes time for everything. And it's the Caribbean. So whatever time you have is time and a half there. But then the profits are also humongous. So it makes up for all this. But I can take these units and I can sell them as vacation points. You understand? It's like vacation points. And people talk about mobile home parks, or what do you call manufactured homes, that you can actually sell them to people with a lease with an option to buy. And a lot of times the people say, I don't want to exercise my option, I'm leaving. And then you can take that same unit and sell it again, all this. Well, okay, that's fine. If it works for you, I just want it to be always a win-win. I want people to win with me. It's good karma. But in hotels, I can take a unit and sell somebody, here is 3 weeks. You just bought 3 weeks in advance. You want 6 weeks, but I still own the unit. They come and use it, but they pay in advance. So you can take the money, pay off your debt, take the money, buy another building. It's insane. It's better than selling pigeons. You sell the pigeon, flies back to you. Okay. From summer 2020, how many successful JV deals have been successfully completed? I've had little issues trying to find a tenant for my property. Okay, good. So when it comes to the JV during the pandemic, we've had a hard time in March and April. As of May 12th, I remember that day, May 12th, we had just a barrage of people all of a sudden dropping prices. Sellers and brokers had a panic attack with the pandemic, and they dropped prices. I remember specifically we had properties we had offered $1.2 million and people would not budge. They wanted like $1.250 million. I mean, we were very close to what they wanted. They wouldn't sell it. We got these properties at 800, 850 under market, under contract. So all of a sudden in May, we had from mid-May, June, July, August, a very good run, getting properties, getting so many tenants that started to make money with this pandemic because they figured out how to lay off staff, how to actually work the kitchen, how to do the deliveries, and the entire market changed. I don't know if you realize how all this changed. I mean, drive-throughs have become phenomenal, all this. So whoever had a drive-through building with a tenant that's willing to deliver and was able to work with Uber Eats and all these that come in and do the pickups and delivers, were able to actually do a lot of profit, and they started looking for new locations. So we had some successes with these, and in various markets, actually even in smaller markets like outside Kansas and stuff like this, cities I've never even heard of. Some other brokers, as of like September, October, started saying, wait a minute, there is demand in this, because the news started coming out that there is so much demand for single tenant buildings. And you can Google this, you will see that actually there was compression, there was less properties on the market, and the cap rates, people are paying more for them. So it created a little bit of an imbalance, and some of my students were getting a little bit frustrated, but we worked through that, and we continue to work through it. So know that the knowledge you have is for life, and not necessarily every property you're going to put under contract is going to have the great feedback, the great attention and reactions from the market, because there are many variables. But the key thing is to keep at it. And you keep putting the right properties on the market, keep hacking away, calling the tenants, doing the formulas. The money is in the follow-up. It's not that easy. If it was easy, everybody would do it. All right. So how do we become members of your hedge fund if we are interested? Well, yeah, if you would love to invest in the fund, by the way, it's called the hedge fund, because when you put money, you can put as little as 25,000, as much as millions, but as little as 25,000. After that, you can put fractional units. You can buy for 10,000 or 5,000, etc. on top of that first unit of 25,000. You can go to sfifund.com, SFI for Secured Fixed Income Fund, FUND.com. So SFIFUND.com, and watch my 14-minute presentation. Actually, you will learn how I present. You will see all the criteria of a fund, how a fund is structured. It will be an educational experience for you. And then you can click and either email us in the office, say, I would like to join. Would love to have you. We pay 6% on the first 25,000 to 249,000. We pay 8% from 250,000 and above. Historically, I started the fund business in 2009 when the economy was disastrous, because people wanted to join me. I was making a lot of money when the market was down, and we're going to make a lot of money also, we anticipate, in the next couple of years, of course. Past performance does not mean future performance will be the same, of course. There's always some risk, but let me tell you, we've done very, very well with this because we are conservative. We're very methodical on what we're doing. You can tap into my connections, my experience, my momentum, and benefit. And when you want to cash out, if you want to cash out partial or full, you don't have to wait 4, 5, 7 years like other funds. The fund is rather liquid. We cash you out within a 12-month period. We've never had capital call. Like, we've never needed extra money and told the investors to put money. It's a debt fund, so your money is not just secured against one property. It's cross-collateralized, secured against all the assets in the fund. And we have lots of assets. You will see we have about 10 properties, commercial mixed use in Puerto Rico. We have currently 7 luxury homes in San Francisco. We are working on 2 land lots to be developed into assisted living facilities in Florida, which we should be closed on in March, and the development will work. I used to not like development, but these are like such low risk, and we have a team of people that have over 20 years experience each. So these are just phenomenal deals, and you can cash out within 12 months if you don't want to stay. You can keep compounding the money. You can use IRA money, etc. So again, sfifund.com, and watch it and make it happen. Our QSR struggle sometimes is to find the decision makers. Any input on how fast track finding them? Well, if you are part of the JV training, you go to the website, you find the actual companies, you find the phone number, what they like, the size they want, who they want to be next to, etc. All this information is online for the JV joint venture website partners, and you're using my fund's money. I mean, literally, you are a joint venture partner with the fund. You're not principal in the fund. I don't want to see that on Facebook or LinkedIn. I had a call from the bank one time saying, hey, somebody put on LinkedIn principal at Mixif or at SFI fund. So what's going on? I had to call the person. Anyway, but you're joint venture partner, and you will get the information. Now, if you're not partner in the joint venture fund and in the joint venture program with the single tenant buildings, when you call the tenants, ask for the real estate department, ask for the VP of real estate, and you'll be able to reach the person and hopefully you have the script, you know what to tell them and how you attract them, you know what to send them because it's a package that we send, very important. Okay, all right, let's see. Victor, for Christmas, okay, I'm so sorry, Sarah, we are, okay, people ask if this is recorded. Yes, it is recorded. How are we doing with time? Sometimes I lose my track. Okay, we're good, right?
Yeah, we're at 1 hour right now, and a few questions. There's a couple questions. I don't know if you saw, I resent. Tim Lee sent in a question about the difference between Reg D and Reg A. Did you see that one?
I have not yet, but okay. So Reg D, there are two types of Regulation D. This is for those who want to become syndicators. We have a private program for this. We've done this for many years, including so many other things. If you're interested in the Reg D, talk to Ashley or Nancy. If you're interested in syndication, I do programs where you can do co-syndications with me. Or now actually we're making a lot of changes in the programs. I'm not doing a lot of the stuff I used to do. But privately we can talk to you. And those who want to set up their own funds, for instance, there is Reg D, which is two types. You can write this down. Reg D 506B and Reg D 506C. The B is for what's called friends and family. If you roll out the Reg D 506B, you can get as many accredited investors, that mean high net worth, they have a net worth of $1 million, excluding their home. And they self-qualify. They tell you I'm worth $1 million. They fill out a qualification questionnaire. They fill out a subscription agreement, and they give you money into your fund based on the criteria you set up. And I can help you set up all this. We have a program to do it. This is private program. I only take 5 people at a time. This is what I'll do in 2021. And this is, you come, you visit with me. I'm the one teaching you. It's going to be a day and a half intensive. It's totally different. And we set up your own fund. I mean, like you can set up your own fund if you want after that. Ashley, who should they call if they want to do syndications?
If they want to do syndications, they can call into the main office and talk with Nancy or I. That number is 844-720-1031. And we, Nancy or I can spend a good 30 to 45 minutes with them, kind of walking through what their goals are for this year to raise capital. And if there's any questions, I can get you involved.
Okay, so thank you, Ashley. Reg D 506B is private. You can raise as much money from accredited investors as you want, but you can only take 35 non-accredited. Non-accredited are sophisticated non-accredited. That means people who know business, but don't have the high net worth or the high income, meaning 200,000 per year in the last 3 years if they're single, or 300,000 if they're a couple filing taxes jointly for the past 2 years and expecting to make the same income this year. So if you are not falling, if people want to invest and they're not accredited, but they're non-accredited, they can actually come in. You can take 35 non-accredited sophisticated people. That's Reg D 506B. Reg D 506C was rolled out with the Jobs Act from Obama, which I think this is a great job and should get more credit for it. When Obama rolled it out in 2014, 15, they allowed, now you can publicly solicit. It's not just for family and friends. You can publicly say, like on my SFI fund, I have my pitch on the website. It's public. We've taken co-sponsors. Some students joined me to be co-fund managers with me in that existing fund that helps them raise money. They can put it in my fund. They can get money. It's just huge way to grow. And the Reg D 506C allows you to raise unlimited cash, unlimited capital. You want to raise 5 million, you can raise. You want to raise $1 million, you want to raise 10, 100. All this has to be filed with the Securities and Exchange Commissions. That means you tell them, here's my private placement memorandum. This is what I'm doing. This is who I am. This is how much money I raise. This is why I'm raising it. And this is what I intend to do with the money. And you keep track with every investor coming in, but you cannot take any non-accredited investors. All of them have to be accredited. You can solicit to the world. Somebody calls you, like on the website, SFI Fund, you're going to see you click, you're going to fill out the paperwork. It's going to ask you first thing, are you accredited? If you say no, can take you in that fund. My mixer is one for family and friend. I can take 35 non-accredited. I think we only have 2 non-accredited. But you can set up Reg D 506B if you have friends and family that you know that know you and you have established significant, meaningful relationship. They can come into these with you. If you want to publicly solicit, you can do Reg D 506C. And when people want to invest with you, you have to go through some type of due diligence. They're not self-qualified. They have to actually tell you, yes, I have income. Yes, this is my net worth. This is the backup. Or you can do it through a third-party company. I use a third-party company for less liability. Reg A is also came in with the Jobs Act. And the Reg A is really way advanced. It's registered with the SEC. That means now they have to scrutinize who you are, what assets you have, what history you've had in the market doing that. And I've rolled out my own Reg A called United Group Fund. As soon as it came out, I was the first one in California to have it. The key thing is, there is what's called, if you want the Reg A, you should get what's called the Reg A Plus. You can raise up to $50 million each year with the Reg A Plus. And you can leverage it. So you can buy maybe $250 million worth of properties. That's like $250,000 each year that you can actually acquire properties with. The beauty about Reg A Plus is you can go accredited, non-accredited, so you can take as many people as you want. There are some criteria for the non-accredited that they shouldn't invest more than so much of their net worth and all this, but there is a formula. All of a sudden, the whole world can invest with you. Everybody can invest with you. It just is a bit more complicated because it's like going public, but you're staying private. So Cherif, can you tell us which one to go with? Reg D506B, Reg D506C, or Reg A+? I've had the three. I have actually Reg D506B, which is mixif.com, Medawar International Group Secured Income Fund. That's been in business since 2009, steady growth. SFIfund.com has been in business since 2015, Reg D506C, I can publicly solicit. And I had the Reg A+, and I realized I don't want the Reg A+. It's too many regulations. I am registered with the SEC. It's like I'm publicly traded, but I'm private. So I have to file the quarterly returns. I have to file the 10Q. I have to pay these audited financials. I have to do all this. And I said, forget that. I'm going to stick with Reg D506B, Reg D506C. My suggestion, you can start with the Reg D506C because it allows you to publicly solicit. Some other people may tell you, no, just do the Reg D506B, promote on Twitter or LinkedIn. People will call you, qualify them, and then you can go back door and then get them in. Well, you're really publicly soliciting. You don't want to do any infractions with the Securities and Exchange Commissions because the world of real estate went from 700 billion, 800 billion in total of money raised that goes into real estate to $4.2 trillion. So it's getting the real estate capital raising is getting the attention of the SEC. They're auditing people. They're going through administrative audits and inquiries. Everybody gets that. Sooner or later, you will get it if you're in the business, and you have to have your compliance in place. So Reg D506C is a lot easier to comply with because it's public solicitation. Somebody want to come in, here are the rules. They respect the rules, you respect the rules, everybody's happy. All right. Hopefully you learned this part. Is very important, by the way, because you're not limited to how much money, credit, and time you have. If you understand how you can leverage, I am your shortcut to success. I have been there. And I've been doing this since my 20s. I worked for a billionaire for 8 years. And so I've been doing this for literally 40 years. I'm 60. Yeah, I know. I know people say, what? How come you have this energy? I don't drink. I don't eat a lot of meat. Every day I'm exercising by the beach. That's the whole idea. You can keep your physical, mental, and emotional power going so you can keep at it. Ashley, what other questions have I missed here?
The next question is from Clinton in Sacramento. With residential homes running low in inventory, do you think I should start with a single family home? I have never invested before and I'm worried about what's going to happen with the pandemic. Okay, so the pandemic, the numbers are going to start dwindling down very soon because there's a vaccination going on. The entire economy has to focus on a recovery. So if you haven't invested before, as I mentioned earlier, you may want to get like maybe a single family home that's a small rehab and partner with somebody who would do the rehab with you. If you have the money, if you have the cash and you want to do it by yourself, you can do it. It's 3 ways to make money. The success formula needs 3 things. Number 1,
So let's say you set up the goal, I want to be in real estate. So now you have the goal. Immediately you have the first obstacle. Where do I get the knowledge? That's why I'm doing the Q&A trainings, because people are going to run into obstacles as soon as they have goals. And that's what weeds out the powerful, relentless people from the weak, not so committed people. So set up the goals. You obviously have the goal to be in real estate. Number two, you need to get the knowledge. Where do you get the knowledge? You can read books, or you can get on calls where what's happening can be answered. That's why I do these calls, $500 an hour if you want to be private. But if you want to go in and ask the same questions right there where everybody can benefit, and you can hear other people's questions based on what they're running into that you didn't think of, you can get on these mastermind calls. So that's where you get the knowledge. If you have somebody else can give you knowledge, great, more power for you and to you. Number two, the actual thing you do once you get the knowledge is you want to take action. So start with small little steps and repeat. Small. What's the smallest action I can take now that can safely get me to the next level? And then repeat. And it's going to compound on itself. Now you're going to find the property. Let me study the market. Let me find the property. Let me understand the values. Let me make this offer. Let me get, this is the counter. Let me see if I can do it this way. And this is where you can actually build it up to taking action. That has to be relentless. You have to be in control. You have to know exactly what you're doing, take responsibility, etc. And number three, you have to network. The key to success is who you network with, who you're going to do business with, who is going to be the contractor, who's going to be the project manager, who are you working with as the banker, who are you working with, who is the seller, who is the broker if there is a realtor, who is the attorney if there is an attorney. And how do you network? How do you network? You don't go to people and say, I just need help. You have to exchange something of that. Any relationship, the quality of the relationship is based on the level of exchange between two people. As a matter of fact, the reason for divorce, you ask people individually, and they tell you, oh, I'm a giver. He just takes from me. Oh, no, I'm the giver. She just abuses me. Wait a minute. If you did not explain to each other, look, here is the exchange and abundance that we expect from each other. If you are not clear on what you expect back for what you give, you will not have this exchange and abundance. You have nobody but yourself to blame. And in any relationship, if you're going to hire people, if you're going to work with people, put it in writing. When it comes to marriage, sit down and talk. Go have a dinner somewhere, not a drink, because you're not going to even remember what you talked about, right? New Year's Eve, so many people got drunk and they couldn't believe it. People came to tell me, I love you, man. I was like, what? But it's good. So the key thing is focus on some small deal that you can afford and have a plan B if you can flip it, if it takes longer, etc. And you should be doing fine as you grow. I prefer to start in commercial real estate where your risk is lower, like in the JV partnership, where you get the property under contract. You put money that's refundable for 45 days. You line up a tenant. You got the tenant, you close the deal, or you assign to me. You don't have the tenant, you walk away, you have no downside. It's the best way to practice to get into the bigger game, which is commercial real estate. You get 1, 2 deals going, you don't need me. You'll have the money, you'll have the experience, you still have access to everything. Go ahead and do it by yourself. You've done it by yourself, you're successful, go to the next level. Set up your own syndication. Set up now your fund. You want to set up with a fund right away to have a shortcut to success? You can come get the training for the fund, be co-sponsor, set up your own, use my fund as fund of funds. We have many ways for you to grow and scale it. And that's why I have Nancy, I have Zach, Ashley has been leading these people and can even get on the calls to tell you. All right, so I see a question here. I need to know from the 5,000 national tenant list in the JV University that I will get access to with the program. I need to know what market you are working, as we are closed in many markets. We are closed in many markets. We'll only have 3 in the major markets. Let me know. I don't understand the question. Closed in many, we're not closed in any markets. There's no such thing as a closed market. Closed in many markets. I don't know. If people eat anywhere in any market, there'll be a need for a food tenant. And those are the fastest growing ones. That's the beauty about what's happening.
And your national tenant list is actually nationwide, just to confirm, because we've had the couple questions. So Cherif buys the 3 major lists that are sold via brokers and combines those lists for the joint venture partners. It's nationwide. We give you the list every single month. It's 5,000 on the university for the joint venture partner program. And a few of you if you have very specific, some people were just asking me about banks and different specific projects they're working on, you can call me next week and we can run a specialized report for you. No problem at all. I do that for some people. So yeah. I see a new question, Cherif, that just came in. What are your thoughts on commercial tax default properties?
Yeah, I was just reading that from Brian. Hey, Brian, good to hear from you, man. I think, yeah, Brian, Happy New Year, Brian. So, you know, so people get into these tax liens and tax deeds idea, and they say, listen, I saw this guy who said I can get them for pennies on the dollars, and I own properties worth millions of dollars. A lot of it is hype. I'm going to tell you the bottom line. Not that you cannot do it. It's just that usually a commercial property that's worth so much money that has a property tax that is due has usually a loan, and the bank is going to go and redeem it. That means they're going to go and they're going to pay the property tax, and they're going to start a tax deed foreclosure. They're going to start the foreclosure because it's part of the loan. When a lender gives you a loan, gives somebody a loan on any type of property, they say you must have property insurance. You must have property taxes paid on time. If you don't get property insurance, the bank will provide you the property insurance. The lender will provide the property insurance, and they will invoice you for it. It's going to cost you more. And if you don't pay it, they'll have the right now to say, this is a default. This is one of the default items, and we now have the right to foreclose on you. I'm not going to pay for you your insurance. Same for property taxes. If you don't pay property taxes when they're due, and you have penalties and delays and all this, the bank has the right to redeem. That means to pay the property taxes even in the last minute at the county, and therefore they will have the right to foreclose on you and demand that payment plus interest, penalties, etc. So when you try to buy tax deed or tax lien that are owed on commercial properties, you'll find that they get redeemed before. So you've done all the due diligence, then you go in and then you don't get it. We've tried that in Jacksonville, Florida, which had a lot of opportunities. We even had videos about it and trainings on whole training on the tax lien, which you can do them, by the way, online for Jacksonville. Maybe you can contact Ashley. She still has the whole training we've done with experts, local experts, and we were looking into that. Very hard to do it. Now, if you get a property with a tax lien, tax deed, there is a period of time. So if you lucked out and got one at a discount, the actual owners of the building have a period of time to redeem it. So if they pay it within 2 years, within 3 years, so every state has a different period during which the person that owed the money has the time to pay it, plus a small penalty. Well, small penalty, it can vary from 6% to 20-some%. And that's what these gurus sell on their program. Hey, buy my program, I'll show you how to get it and get 18% or whatever. But really, there is no cash flow. They're going to pay you at the end when they redeem it. You either want flips to make big cash outs, or you want cash flow. Okay, this is how the business works. These are called productive assets. What is my end goal to become wealthy? Is to have productive assets. Some people say, Cherif, I sold my properties. I want productive assets, meaning my money is an asset. I'm going to put it into your real estate fund. It's going to produce income. And when I get 8%, I cannot find it in apartment buildings. They're selling at 4% return. I'm going to make double with you, and I can go enjoy myself, go travel the world. And there are so many places you can see around the world. It's not even fun, right? So what's happening is that's a productive asset. You can put your money cash somewhere, produce income. You can put it with a fund, a real estate fund. You can put it in a building. You can put it in the stock market, buy the S&P 500 if you don't know anything. Buy the Berkshire Hathaway. If you think you're going to outsmart Warren Buffett, I have news for you. Nobody has these connections. Nobody can do what he does. He doesn't pay cash flow. He's not going to pay you cash flow. Warren Buffett does not pay cash flow. Berkshire Hathaway just eventually over time increases in price. And maybe you can sell it later. But the key thing is understand tax liens and tax deeds, backdoor to foreclosure for apartment buildings or whatever, they're going to be redeemed. So you're going to waste your time either by the bank at the auction or when you buy them within a period of time because somebody's going to discover that, hey, there is a delinquency and the owners are not going to let it go. And so you may want to buy it on a property that doesn't have, listen carefully, it doesn't have any debt, number one. Number two, the owner may have died, so it's like probation. And number three, it really is a property that exists and you can actually do something with it, not just it got demolished and it's just the land and its problems. And to find this is a needle in a haystack. And even when you find it, somebody, some family member, somebody will redeem it. very, very hard to get commercial tax deed, tax liens. Work on something that you have a better and bigger return in a shorter period of time. Okay, more questions. Hi, Cherif. How often do you update the tenant list? How often do we update the tenant list, Ashley?
Once a month.
Once a month. Quite a few contacts no longer work for the company. Yes, remember, guys, the phone number is the company. The individual who may have a name may not be there. They get transferred, they get fired, they get eliminated. I was just talking to, well, we'll say a couple companies, and Tommy Hilfiger. And Tommy Hilfiger said, listen, we're readjusting, we're doing this. This is a big company, very successful, part of Van Housen, very huge company. Coach continues to do well. To my surprise, I'm happy because I have them as a tenant. They pay a lot of money. They've been with me 14 years. Quadruple net, that means pay tax, insurance, maintenance, and they take care of the structure. So yes, I'm sorry, some of these people will leave. New people come in, we try to update. When we send them and request, sometimes they don't update, but we actually work with different companies that do the updates. But you will have the actual number of the company. And if you have an update that we didn't update, please shoot us the email, we update. If we have a new tenant that we did not have on the list, help us. We will update it. On my website, if I don't own any property yet, what I do, property I have on the, okay, I'm not sure I understand the question from Ishan. What is the difference between MIXIF and SFI fund? Okay, actually, they're exactly the same. The MIXIF.com fund is a Reg D 506B that pays 6% on the first 25,000 to 249,000, pays 8% per year from 250,000 plus. The investment, if you want to get any of your money out, whether you put 25,000, 100,000, a million, you just send me directly an email and you cash out within a 12-month period. We cash you out sometimes in 90 days or so if we're not going to deploy your capital, but we cash you out within 12 months. Full principle comes back to you. SFI fund is exactly the same. 25,000 minimum, you can invest millions of dollars. You get paid, you put your money on Monday, you start accruing interest on Tuesday. There's no delay, there is no fee, we charge no fees. Zero acquisition fee, zero management fee, zero disposition fee, no fees whatsoever. I only make money after all investors get paid, I make the money. Why? Because I set it up originally for my students and investors that I've known. And we thought we were gonna raise 5 to 10 million. We raised that in the first 90 days. And we've been doing it for years. So the only difference is SFI fund, I can publicly solicit and you have to be accredited. MIXIF, I have to have known you, get to know you better. You're in my database, you know what I do, I get to know you, and then you can invest. Both same asset. As a matter of fact, both are set up to partner with each other. So sometimes I'm doing a deal and we'll take some money from MIXIF, some money from SFI fund, because this gives power to the investors because your money has safety. Here are the 4 things you're looking for. Write them down. Number 1, when you look for an investment, look for safety. Is my money safe? Well, with my fund, we don't just buy one property. Your money is not secured by one apartment building or whatever. It's secured by all the assets in the fund. And the assets are different type of assets. We have luxury homes. We have mixed-use commercial. By location, which is also San Juan, Puerto Rico, which is steady market, done well for years. I have my own inventory of 20 properties in my personal account with my wife and I. And we also have San Francisco, great market, limited supply, limited inventory, high demand. Okay, so different type, different locations, and number 3, different style. The luxury home in San Francisco, we buy, fix, and sell. Commercial, buy, reposition, and keep for cash flow. So you have safety. That's number 1. Number 2, you have cash flow. We pay you every 6 months, February 28th, August 31st. February 28th, August 31st. We never missed it. For 11 years, we paid even during the pandemic. We cashed out millions of dollars to some people that wanted to cash out during the pandemic. Cash them out. Millions of dollars. You can quote me on this. Okay? And number 3, you have safety, cash flow. You want what's called liquidity. If you want to cash out, you're not stuck with me for 5 years. We'll cash you out within 12 months. Number 4, you want to make sure that we have reserves, that we have the cash, that we have the profits, that we have the cash to buy on good opportunities, we have the cash to cash out people, etc. It is set up as a debt fund to give you peace of mind so you can have a reliable return. This is why it's called Secured Fixed Income Fund. Medawar International Group's Secured Income Fund. Okay, so Ishan, okay, so Ishan will talk to Nancy at 844-720-1031, extension 408. All right, I guess we caught up with all the questions. Somebody asked, can Cherif keep talking? There are a lot of golden nuggets here. Well, I appreciate that. So the most important asset you have is your time. And you want to accomplish the most possible in the least amount of time and effort and money. That's why I'm doing the program of doing the mastermind. It is like $100 a month. It's like $97 a month. So it's about $1,200 a year. If you prepay for the whole year, it will be $1,000. We'll just do it for $995, and you're in. And by the way, I know what you're thinking. What if I don't like it? What if a couple months into it, I say, geez, you know, I don't like the questions they're asking. I'm not learning anything from Cherif. None of it applies to me. Don't worry. You email the office, simple email. I'd like out. We prorate the difference, and we charge it at $100 a month. They say you prepaid for the whole year. A couple months into it, you say, I don't like it. We refund you the balance. We just calculate it at $97 a month. Make it very simple for you. If you want out, if you bought and you decided at any time during the year you want out, we prorate it and get you out. I don't want any stress. I don't want anybody unhappy. I want results. And I want you to actually participate in these calls. So everybody that's going to be in the mastermind, we're going to throw in so much value. I want you to tell me a little bit about yourself. I'm in the development business. I have no experience in real estate. I do this. I want to know you. And Ashley will handle that. Ashley, can you tell them what they're going to get? And also, who did they contact for the mastermind?
Yep. So with this program, obviously, Cherif's really hot, heavy, and excited about these mastermind calls. This is going to be super beneficial for you guys, and he can go into it a little bit more. But with the mastermind live calls and questions and deal review, it's going to be set up, obviously, a little different than this. It'll be a smaller group. We're going to see each other on the mastermind calls, and Cherif's going to be able to direct that and let us brainstorm and do a lot of deal analysis on things that you're putting under contract right now. But on the other side of it is the training side. And with the training side, once you guys enroll, you're going to get immediate access to the university. Cherif has put together a very specific amount of live videos that he has done to help you guys get the baseline and the foundation of what you need for the commercial real estate. So you're immediately going to get his recorded 3-day class on commercial real estate, where he was focused on multi-units, mixed use, and raising capital. You're also going to get a bonus, his 2-day syndication class, which covers syndication. And you guys had a ton of questions today about that. It covers joint ventures and partnerships, how you actually structure those deals for yourself. It comes with the legal documents, and it's going to be able to all tie together so that you have the training you need. And then once a month, Cherif's going to be able to get on those calls with you. And then as of today, you see that he also incorporated a commercial roundtable program that we have. So each month I will drop into your university a different specific module for apartments, hotels, land development, creative financing, assisted living, retail, storage, gas stations, parking garages. We have a module for each one of those. So that is just one more bonus you guys will get. So that is what it is, a training course with the most important element, which is Cherif and the live mastermind calls every month.
By the way, thank you, Ashley, so much. By the way, it's funny, somebody sent me, like I always look at what people promote out there, and somebody sent me, come into the mastermind and you just pay $300 a month and we get on a call. So I clicked and I said, well, let me see what this guy's offering. And it starts with, if you think, this is the guru, he said, if you think I'm going to be on these calls for $300 a month and 1 call per month, you must be crazy. But if you do want to reach me, I'm $50,000. It's just kind of funny. No, I will be on the calls. I will be the one answering your questions, and there will be no time limit. And I'll close by sharing with you what I'm doing next. So I am here in Cancun. I have a unit. This is a condo hotel, and the beauty is I get to live in the hotel with the kids, my wife and kids, and we get all the services of a hotel. So here is, for instance, the hotel. All right, we used to do some functions in here. You can see over there is where the volleyball court is. So I see them as soon as they start playing. This is better than Bora Bora Beach. You can trust me on this. This is in the hotel zone in Cancun. And that's what it's all about. You end up getting the right quality of life you want. And people say, wow, well, I want to do the same. And this is not luck. You work hard. I worked very hard, but I knew my priorities. I don't get obsessed about money. You don't need to get obsessed about money. You just need to have good judgment. Take your God-given talents and development into useful, marketable, and profitable skills, and then get some luck. And the way to get some luck is to network, get the right people, and make the most of what you have and what you get in life. And so I want to thank you for your time and for listening to me. And hopefully those who are going to be with the mastermind, we can maybe do even some special events. And maybe we'll be doing an event for the graduates of Puerto Rico. We'll be doing an event in Cancun very soon. So I look forward to seeing these guys coming this year. That's the live event, only live event I have scheduled. The rest will be on these calls. And let's make some great success stories of money making strategies that everybody can share and learn from each other. That's it, Ashley. Anything else I need to do?
No, I think that's it. So if anybody wants to be able to get into the first group for this mastermind, we will be starting next Saturday. The call will be private, obviously. You can get enrolled into that today at the discounted price that Cherif talked about by calling Nancy at 844-720-1031. Her direct extension is 408. If it's busy, leave a message. You can also email us. You have our emails because you got links to this. So feel free to just call us if you want to review the package one more time. But now's the time for you guys to really get involved. We're super excited about it. And I just think this mastermind is going to really take it to the next level for people in first quarter.
Cool, cool. Somebody's asking what this the discounted price again, instead of $100 per month, so it's $1,200 for the year, you will go to $995 for the whole year. So you get like 2 months free. And you still get all the monthly commercial real estate roundtable. So monthly, you will get an actual access to its specific type of property where you will see how we did a training, a live training, how to find the property, that type, let's say storage facility, how to find the tenants for it, how to analyze. It's called the FACT system. Find, analyze, control, time, and strategize. How to find the right property, how to find the right tenants, how to analyze the numbers of the property, how to analyze the market, how to actually facts, find, analyze, control, how to control the negotiations and the paperwork to purchase the property. What do you put in a contract? Like in joint venture, single tenant retails, you guys know what to put in the contract. What do you put in the storage facility? What do you put if it's a hotel, etc. Also, then we talk about the due diligence, which is the find, analyze, control, time. How do you time the process of due diligence? Because you have a certain period of time. How do you time the financing to be able to do something creative? If you have a syndication, if you're getting a loan, or if you're getting partners, how do you time that process along with the due diligence? And then the S for the fact systems, how to strategize to get the best management structure for that property and how to take it to its highest and best use. Okay, somebody says I did not answer the question about the asset protection. Okay, you're right. Thank you for keeping me on course. So we choose Wyoming LLC for the asset protection, guys, because Wyoming is a state that created the LLCs in the United States of America in the early 70s. So they have in their code, in the code itself, protection against charging orders. So if you get sued and you lose in court, and they actually create a charging order, that means they come after you with an order from the court to pay, you actually, all your money will be leaned, all your equities will be to the Wyoming LLC that you control. And the Wyoming LLC has a code that says, we don't comply with this. The charging order does not affect us because we are not paying this under duress. So you're able to protect your money. You're able to pass on the wealth to the next generation. Now, that doesn't mean you're being unethical to whoever you inflicted some damage. You actually have insurance. You will have insurance. This is not to substitute insurance, but to supplement your protection. It is airtight. We've checked it federally, and we have hundreds of students who've done developments and things, and it works out great. It gives you peace of mind, and we make it happen. Where in many spaces for rent buildings. Okay, somebody's asking about the joint venture program. Anybody has questions on these guys, call the office. The main number is 844-720-1031, extension 408. Ashley, what if they are like outside the country and the 844 does not work?
Then they can call our other number, which is 407 407-608-5448, and that will come directly to me. So that's 407-608-5448. Of course, they can email Nancy at cherifmedawar.com. They can email me at Ashley, and that's spelled with 2 E's, ASHLEE, at cherifmedawar.com. And any email that they get, they can respond to, and we will answer it. I do have somebody asking, Cherif, how the mastermind calls are going to work. If you could just, I'll summarize how you and I have decided to put them together, and then you can extend on what I say. But the mastermind calls won't be exactly like this because we had so many of you. We didn't show all of your faces, and we just took the questions on the chat box and the Q&A. For the mastermind, it's going to be more private. And so you guys will get access, like I said, to a free private link. And the second Saturday of each month, Cherif will get on the call. Our goal is that we get on and we talk about, 1 to 5 strategies that he's using right now, or things and trends that he's seeing in the market. So it'll be a little education in the front of it. And he'll probably cover, especially the commercial real estate roundtable we'll be giving you each month. We'll go to that so that we're making sure you guys are staying on track. But then we're going to open it up to deal review. A big part of this that everybody's been wanting is Cherif's advice, his knowledge, his creativity on financing. Should I do the deal? We're actually going to be going through deals. So you guys are going to have a special email to be able to send us your deals prior to the call. So Cherif can take a look at it. And then we're going to do it live so that you guys become experts in analyzing your own deals. And we're going to give feedback on what we think you should do to take it to its highest and best use for financing, for funding, all of that. And that's going to be done live with you and your beautiful faces on the screen talking so that we really grow that inner circle together. And then, of course, we'll end with as many questions as you want. And like Cherif said, he won't get off the call on these masterminds until you guys are satisfied with your questions. So it'll be training, deal review and analysis, and then live Q&A and brainstorming. And there's really nothing more powerful than that, than being able to work with him directly every single month on what you're supposed to be doing to make 2021 your best year yet.
Thank you, Ashley. I just want to be clear what we're not going to do on these calls. I'm not going to be, this is not a substitution to the syndication training. This is not a substitution to the in-depth training of the joint venture. You will not be getting like proof of funds from me to do stuff. This is really purely updates on the trainings of educational stuff, you asking questions on what you're doing and us brainstorming together to get the best answers and get you going to produce results. These are going to be very unique. They're going to be great. And I'm looking forward really to next week when we start the first one. Thank you so much. Appreciate all your time. And there are a couple of questions I will just answer by email to finish everybody that has been waiting here. So don't worry, I got the last 2 questions. Thank you all. Take care. Bye-bye.